Alrighty, well, welcome in, Sunday, July 20th, 2025. I'm your host, Gerardo G. Money Pius, and right here in our inner circle studies, kind of reviewing the market, preparing for the week, reviewing the previous week, and just, whatever knowledge we have, we can learn from and continue. And again, right, these calls are for educational purposes only. So any trade idea, any speculation, that is it, right? Pure speculation on my end. So let's treat it that way. Know how to manage your accounts, but most importantly, right, do not trade any money you cannot afford to lose. And yeah, last week was an eventful week. It was actually we started off pretty well. And the Wednesday news, right? The Wednesday news that didn't move the market and I know you guys remember then the next thing you know on Forex Factory at that Wednesday, there was I guess a headline news, just breaking news that Donald Trump, President Trump, drafted a letter to fire Powell, and then the market just boom, it just moved so rapidly. That was very interesting, right? It wasn't scheduled. I think there were two red folders at that time as well. It didn't really move the market either. Let me see if I can find them here at Forex Factory. And okay, let's see. Yeah, what was it? Tuesday, right? We had all this red news on Tuesday. It was fine. And Wednesday, right? Wednesday, we had 7:30 news that came out negative. But then I think well, it wasn't even here, right? It was like if you went to the website, there's a big headline up there that gave us that information, and they just completely turned the market around. So very interesting. Um, News there, and then from there, Thursday, and then I think there was Friday. There was no news. Friday was very slow. We'll review those things here today. All right, guys. So today I do want to analyze the chart with you guys using the sessions um, template that I have. Right, this template is higher time frame session plus the sessions. So basically, I have three indicators. Okay, these three indicators you can actually get them for free uh, through by searching them. One is the sessions indicator, FX market sections by Boyd Toiki. The other one is our two higher time frame candles, but HDF. I already have a favorite there. Higher time frame candle boxes for lower time frame charts by K Rolo 41. I have two of those. I have two because one is set to give me the week box time interval, and then the other one is to give me the day. Right. So what that means is that when I go to the 2 hour chart, the big box represents the week, and the smaller boxes, right, represents the days inside. So here, like right here, you don't see the big box simply because it's just a setting that I have off or on. Let's see if I can exclude body. Yeah, there's a setting that he used to have here that it'll show you the new week or the new time frame needs to open for us to have that on, right? But I think he updated that and just said not anymore. Okay. But yeah, let's analyze kind of where we've been at. These have been the last weeks on this view. Like if we look at it last Sunday we reviewed it by candlestick like this, but now I want to review it simply like this. These gray boxes, they represent more the bullish close. Let me change it to this color. Let's see. Should have long boxes. There. All right. So the gray boxes represents the previous weeks, and it's just it has been on this range. The price has, but the gold trend is still bullish, right? The gold trend is still bullish. These last 2 weeks alone, this week closed bullish. The next week, we slightly made a higher high, right? Than the previous. We pulled back. We pulled back to about what, just a little bit past over 61% of the previous week, and then we found some support. So as of right now, right, I think we're going to continue going upwards. There's not an obvious trend, but I think we will continue up going upwards. So let me rewind, let's say to right here. Okay. Previous week. Okay. There is some structure there, right? There is an impulse, and then there is a correction inside. But on the weekly scale, it's just one candlestick, right? So technically, that's the previous weekly low, okay? And technically, that's the previous weekly high. Would you guys agree to that? Right? Now, if I go to the weekly candlestick, there it is. Okay? Previous weekly low, previous weekly high. Okay? So let's go back to the 4-hour chart. So before this week even began, right? Again, right, this won't have the box simply because, the new week needs to begin. Let me add one more candle, and there it goes. All right, that's that Sunday market open. That Sunday market open. If I measure from low to high with this fib, okay, let's just kind of review what happens. There it is. That's what happened. Okay, now let me just rewind that candlestick. Okay, so these candlesticks that don't have a box in there, right? When the market opened on Sunday, it went down right in between the 50, 61%. And then from there, it went back up. Okay. That 23% level, was a deciding factor. And it brought price back down, turned it around. Boom. Went to lower levels, 50 to the levels, the actual 61%. So this first turn right here, right? This first turn here was about a 50% touch. And then this next turn here was a 60% touch. 61.8% touch. Okay. What you got there, Dan? That was catching your attention there, the rally
Yeah,
base.
I guess you could call that a rally base rally, yeah.
Mm-hmm.
They touched right in at the break of structure, basically candle, or like I said, a rally base rally, probably an 8 hour.
Okay.
Yeah, that was a nice pullback.
Mm-hmm. And that's a good observation there. So here's the thing, right? So why didn't it touch it the first time? And then why didn't go to the second time? Right, guys? So let me actually see, Dan, if that's an actual yeah, it is. It's an 8-hour rally base rally. Let me go ahead and this is going to be a good observation just to kind of give us some studies here on the ETM candlesticks. We'll go ahead here and mark up the 8-hour candle. Let me put this in blue since it was a bullish zone. So this is an 8 our rally-based rally on the Saxo chart. Okay. And it actually also did touch, right? It did touch the what do you call the
The
wick,
wick,
right? Of that, if we want to be technically correct, it did touch it. It is in the zone, and then came back and then
the
grabbed over there.
50% of that zone too, which is like I said, I always usually put like a 50% line, the midpoint on a structure like that, because it's the midline. There you go. And it usually shows a good indication where price gets to, and it hits it almost every time.
Gotcha. Perfect. Thanks for that. 8 hour morning star. Yeah, this is, and again, Dr. Latrice, this is on the 8 hour time frame. You're mostly, a lot of times you're looking at them on the 5 minutes or lower time frames. This is a good example as well how this is also fractal, right? A lot of times you see a morning star, evening star on the edges, and then it forms that rally-based rally pattern, and then it comes back, right, to that rally-based rally pattern and goes from there. Yep. Good observation there. But here's the thing, guys, right? Okay. So I remember this move here. This is about 2 weeks ago. I think at that time Twanandi wanted a lower zone. He wanted like a 32.90. I was looking for buys already, right where this wick is at. And he was saying I want 32.90, which about $7 more. But it's just interesting how price, it decides to get there, right? It decides to get there. And again, the most popular turn up there is like, oh, manipulation, grab liquidity. And I try to avoid those things are true, right? But I try to avoid that on the foundation of learning simply because it's like it's more an advanced thing just to kind of get an understanding. But we need to understand also why this this price level turned sooner. Okay. And it all comes back to um, reviewing the market with impulse and correction and then and extension. It all comes back to that simple scenario. Okay, so the 1 2 3 strategy or the 1 2 3 markup, it's basically you train your eye to find an impulse. Okay, the impulse is telling us, the direction of the strong move. Okay, so after the impulse is complete, right after the impulse is complete, the correction happens, right? Or the pullback, like so, right? Excuse me. Yeah. After the impulse is complete, right? After you notice an impulse, you start measuring that impulse with the fit, correct?
Mhm.
Like so. Okay. And then you have to wait for price to come back and at least touch 23%. Once it's touched 23%, your fib is set. Okay. If your fib was if you saw your impulse right there and we haven't had any wicks touch the 23%, well, you have to wait for that to happen. Yeah, you just, okay, this is the price. It kind of went there, like, and then price went a little bit higher. And then, well, then you stretch your fib as well with it. And then finally, whenever price touches the 23%, all right, good. The fib is set. Yeah, the fib is set. And then from here, right, these are the retracement levels are anything below that 23%. Okay. The retracement levels, which they all have different meaning. I won't go in too much detail right now. Right. These are the retracement levels. So again, though, right, this is the entry zone, right? The entry zone for the impulse, correct? That is the entry zone for the impulse. Anywhere right here. The stop loss zone is down here, below the one. And then the take profit zone is up here at the extensions. Actually, no. The take profit zone is technically right there. Okay, technically right there. So this is the extension levels, which is at the same time TP zone for the impulse. Alrighty, guys. And this is what I train. This is what I wanted you guys to train your eyes with every time. Okay. We got an impulse. We got a correction. Let it retrace below 23%. 23 is also a good area to enter, just depending on how many pips there is. And, but again, this is the retracement levels. Retracement. Okay. And then our stop loss is down here. Okay. We really want to be technical. Okay. I do have this. I add an extension below the one. And this is a tip that I got a long time ago. It's in the back of my head, right? That basically this right here, in between the 1 and the 1.1, that's kind of like your liquidity grabbing levels, right? A lot of times stop losses do come in and take the low and take the highs. And this is the zone there that price likes to kind of squeeze people up to the 1.272. Okay. Now, granted, that is an option, but I'm just giving you guys that visual with the fib. But yeah, it's usually the stop loss goes below or at the one where you started the fib. Okay. So once price completes its pattern, here, right? TP1 is at the 0. TP2 is at the -18. And then if price does this, okay, as of right now, based on what I've been back testing, and it's been very consistent, we cannot extend the fib. Okay. But this is what happens. So then from here, price sometimes likes to come back, maybe around 23%, maybe one more touch on that same zone. And then when we finally get a touch of the 272, then we have an actual new impulse, right? Then we really do have an impulse. And the higher high has been completed, right? The higher high has been completed from here, from the lowest point, from the lowest higher low, okay? From the lowest higher low. So let me mark this up. This is the low. Target stretch. There it is. Perfect. So this is the low right there. Then this is a high. Okay. Then here, let's up a little bit. This will be our higher low. And this right here is not our higher high. Our higher high has to be the one that touches the 272. Okay. Because if the retracement has a rule, then it needs to touch the 23%. Same thing with the higher high, right? It needs to touch at least the 272 to give us enough movement, for it to be considered a higher high. Okay. Now, granted, it is higher, but this is more for the fib level scenario. Okay, adjusting the fib. Okay, adjusting the fib.
You're basically saying the fib's not complete until it's hit the -272 or -382.
Yes, sir. Thanks for that, Dan. Yeah, so the fib is not complete of this first impulse that was measured until it actually touches the -272.
And what time frame do you look for those impulses? I mean, I've gone from higher time frame, the lower time frame, you can find them. So what is your guide as far as what are you looking for and what you set your eyes on? Is there any particular time frame or it doesn't matter as long as you find an impulse?
Um, the the higher time frames is important. So like on a markup scenario, Ron, I do like to start from the weekly, right? That's why I use three impulses. Three impulses. The
Okay.
weekly, the weekly impulse is the bigger
Okay.
map of the entire week, right?
Okay.
The 1 hour box, that's
One
the
hour
second
box.
one.
Okay.
That's more of the intraday guide, right? And then the
Okay.
third one is the actual entry because inside, right, inside of the 1 hour time frame, we're gonna have some smaller impulses and corrections. And then I
Okay.
use that for entry.
Okay. So you don't go down to the 5 minute, 2 minute, just those three
Well, the
scenarios.
the third the third one can be it's variable based on the setup, right? But as far as like the map is concerned, right, there's the weekly candle, the 1 hour box, and then from the other one, it's dependent on what I see intraday.
Okay,
But
got
I'm
you.
I'm gonna write some notes here next week. We will break that down here momentarily. Okay,
All right. Thank you, sir.
my problem, no problem. I mean, 1 hour time frame box, and then let's see, Doc. I need to ask a question here as well. How do I save the entire chart? Like, it is change. Okay, so between devices, then Nico, TradingView does struggle keeping up everything in sync. But over here on the right hand side, you can like create a new layout and then save it, right? Create a new layout and save it, and name them as well, right? Name them as well. I personally on my desktop, I don't use the browser at all. I use the apps. Okay, I use the desktop app. I use the TradingView app on the iPad, and I use the TradingView app on the phone. So, but yeah, you can name them over here. Um, and I have this one named G Money Trading. Whenever we used to do Sundays, when we do Sundays calls with Marcus, I switch over to the Trade ETM one, and then there it is. Okay, there it is right there. But simply, right, it changed everything. Let me go back to the G Money Trading one, and there we are. We were on this chart. By the way, next Sunday will be Marcus will be coming back on this. I do like maybe for some, some go tab crazy, right? There's ways to do tabs up here, guys. Yay! Another tab. You can start a new tab and then open up a new layout inside a trading view. So there it is. You see. So let's see. Like for example, I got one for my daughter over here, both daughters over here. For whenever they want to start really want to start looking at charts, it's kind of there. But yeah, and then you just simply like trade ETM, and it's this one right here. It'll open up. So this is the trade ETM one. This is the one I use on an intraday basis. See, Dr. Latrice asking specifically about questions. It's the candlesticks are important, right? But when you start changing time frame, you start changing the anatomy of it, and then it's like, well, so which time frame am I going to use, right? So we technically don't know that that's going to be a strong, reversal hammer or reversal morning star, evening star until it actually reverses, right? Until it actually reverses. So that's what's interesting because here, right? If we go back to this example, it's starting to show that reversal pattern here, and but it actually came back lower and then did it again. So it's that's why I think the reading the impulse, I think to me is the strongest thing, and then the 23% level will come next. Okay, but yes, this is so yeah. The We cannot move the fib unless the extension of that negative 0.272 is touched.
And not only that, G, if you just shift over, pull your chart to the
One more
right,
time then.
pull your chart to the right
Like
and
this.
looking left. I want to look left. I want to show, because you know the fib won't be completed until the extensions when you look left a little bit. So drag your chart over. I'll show what I'm talking about. The higher high we want to reach is this next level right here. These guys, which is right at your 272. That's when you get the new higher high.
Mm-hmm.
So, and then the next level will be this one. So that's what I'm saying. Like I see what you're saying, because you have to hit the extensions to create that. If we don't break that new higher high, you don't extend the fib.
Mm-hmm.
Okay.
Yeah, great point there. Great point. And again, a lot of times it lines up with those scenarios right there.
Right.
Mm-hmm. All right, so let's get back to here, guys. Um, and show you guys the next phase here. I'll just go ahead and share this with you all. I'm gonna save those drawings. But let me erase all this. And again, right? So we got the previous weekly high measured. We got the previous weekly low measured. Let me. I like the green. Okay. And we will do it like this. Okay. So then here, right, we had that 8-hour rally based rally in the way. Okay. But as price is coming down to it, it's also coming down with its own structure. Y'all see that? So this was an impulse, and then price came down with its own structure. You see? So price did not pull back here because it grabbed liquidity. Price did not reverse from here because it grabbed liquidity. Price reversed from here because if you were following this structure here, it touched an extension. Okay, so let's put that to the test. Like so. And then we're going to ask ourselves, right, why did price reverse there? And then why did price came back and come lower? That was a question. All right, I got that question down. You can come back to it. So let's see here. Okay, so remember, the price reversed at those arrows. We really can't see the structure there. We may have to go to like a 1-hour chart or maybe a 15-minute chart. Okay, and again, though, as price is going down and moving up, it's moving in it's always moving in waves, right? So this is an impulse, right? From high to low. So we have a main impulse over here, like that. And then on the bigger scale, we have it doing this. But inside of this pullback or that arrow pointing down, we have this, correct? So it's also that's why it's important to be able to read the waves. Let's go to a 30-minute time frame. There it is. It's a little bit better. Same structure. All right, so let's put it to the test here. So this is an impulse. We fib it from high to low. Okay. The high started there, the impulse, the pullback, 61%. You hit play. And look, why did price reverse right there? Because it touched
272.
the 272. It could have reversed from the negative 18.2 as well, right? But when price touches a 272, it usually that's an area of that it's done buying. Okay. So because this touched the 272, then technically that's now a higher low, a lower high. And then now we can call this a lower low, correct? And because we have that, we can walk our fib down to that wick and do that right there. Okay. So again, right, that's the reason why price turned around. Now, at this same time frame, there was this little rally-based rally that I liked as well. And that one was lined up perfectly with the extension. Okay, with the extension. Right. But to me, that's the most consistent thing that we can find is by just looking for an impulse and a correction. Okay. All right. So let's hit play. Price goes a little bit higher. And boom. Remember, we were talking about the extensions above the one and how you can give yourself some cushion with the 1.1 extension. And look at that. Right? Because technically stop losses are above the lower highs or a low point and high point. Look at that. So if we let's say we would have if we would have said, okay, I'm still looking for sales. I'm still looking for sales at the 78%. Okay. At the 78%. And then I'm gonna take it right back down to the extension. Okay. But where our stop loss goes? Our stop loss goes there. Right? That's a technical markup that we share every time. All right, well, if you want to give yourself some extra wiggle room, you can add the 1.1 extension. Do that. And then there it is. I won't be entering from over here. I'll probably be entering somewhere around right there. Perfect. And then what happened again, guys? What happened again here? Price came back, completed the lower low, and it touched the 272. You guys see that? But even before that happened, check this out right here, Ron. It actually touched the negative 18 first, gave a crazy pullback back to the 272, right? And then the 272 was enough pressure to bring it back down and then touch the excuse me, the 23%.
236.
Yeah. And then it brought it back down, right? Like maybe, I mean, to me, that's like, oh my goodness. Like we literally just talked about this, guys, remember? In the past, because we made a lower low here, we were already moving the fib down, correct? And made this a lower low. Impulse correction, and then we have this hanging around right here, right? So impulse correction, a little liquidity grab, came back down. It touched the negative 18, but it needs to touch the 272 for it to be an actual fib. Okay. A fib extension. But because that negative 18 is our take profit area, when you take profit, well, market moves. But that 23% kept price down, and then it finally brought it back down to the 272. Alrighty. Now, but don't forget. So these are the reasons why price turned. Not always because of now the 8-hour rally-based rally was there too, right? But this is the more fine detail of why price is turning, because it reaches an extension. It reaches an extension, right? Now, simultaneously, this is just the pullback. And then this wave down brought price down to these levels here of the in between the 50, 78%. That's why I don't need to add more fib levels, guys, right? I know the 71% is popular, sometimes 72, right? But there is no need to add more fib levels, right? Because if it's not touching one of these properly, it's touching it on the other way, the correct way, right? All right, so now we actually got into the deeper selling zone. Let's go back to a 2-hour view in this example, and let's see what happens for price. All right, perfect. So there it was. Okay, here it was. Sí, Pablo, discúlpeme. Sí, el temporada más alta es siempre buscar lo más importante. Por eso me gusta empezarlo en el previous weekly low y high y por lo mínimo la hora de las cajas que usamos también. Paul was saying that, there's just a lot of movement in intraday, that it's always good to always have the higher time frames smacked up because it's a lot of movement there. Okay. So
You mark
here,
the previous weekly high and low on doing it, and then you do the fib on the 4 hours. That's the standard.
yeah. I do the fib on the 4 hour. I mean, it's technically the fib. That fib level will carry over to all time frames, Ron, because
Okay.
it just will. But the high and the low don't change no matter what time frame we go to of the previous weeks. Okay. Let's see, continue on here. Let's go back to the 4 hour, excuse me. And see here's who we're at right now. Just kind of check this live. All right. So then again, guys, see the candlesticks, they also have that same rule, right? The not just the well again, right? It's not just the structure, it's also the candle. Oh, Joe. It's not just the candlesticks, right? It's even not just structure. The candlesticks can also do that. But even though, right, we did end the week with a higher high, right? I still think this candlestick right here, well, there's more, but I want to get the most recent one. I think this is a candlestick here that's kind of controlling the week. Okay, controlling the week, simply because this one just barely tapped above it, and even this one also just barely tapped above it. But I am liking this one to continue using that one to measure the week. Okay. And there we are, guys. Okay. The most important thing about this, okay, what's 3 weeks have passed, right? Let me ask you guys a question. Thank you, Joe. Yeah, 3 weeks have passed. This is the previous week. This is 2 weeks ago. This is 3 weeks ago. This second 2 weeks ago did not make a high enough for me to consider this one as as a control candle. Last week, let me just check how we closed. It said we closed bearish. Okay, so again, I'm not going to use this one as a control candlestick either for us to measure our week. I'm going to use this one right here. Okay.
However, G,
Go for it.
I'm still looking at that previous weekly bearish one, this one right here, this candlestick, because that still hasn't completed either.
Okay, perfect.
That impulse still has not, that fib still is not exhausted one way or the other.
Yep, I like that. That is true. This week right here has been stubborn and won't let it go up there. So there's definitely two ways to analyze this. So as of right now, what's happening right now, okay, as what's happening right now, what's the question I was going to ask was, why is this keeping me bullish? Okay, and as of right now, just to make the explanation simple, is that price is above the 23%. You see that? As long as
Yeah.
we stay above that 23%, I would like for us to continue going up at least to the extension. And then check it out, Dan, as you've been saying, right? The negative 272 extension actually breaks the candle.
Exactly.
Actually breaks
That's
the
what I'm
candle.
waiting for. That
It's
break
just taking
above.
its time. I mean, like you
Yeah,
said here, it's been taking 3 weeks for us to break this candle. So this bearish pressure is valid. It's definitely valid. And if we flip the scales, and if we actually measure that previous week, that's why I like drawing the fibs on the right hand side, just so it won't clutter things. So I'm getting the high and the low of this week. You know, we actually managed to reach the 786 extension multiple times. So even so, right, even that impulse has a story, right? Keep in mind the 23%. Right here, buyers went back up, sellers try to bring it back down. The 23% here brought it back up. Sellers brought it back down, but this time they were not able to bring it back below 38, and then prices going back up. All right. So, and then again, this area is going to be tough to break because it's the 78% of this. But that's where momentum comes in, right? Momentum comes in to read the scenarios. Let's see, Daniel has a chart for us here. Let me open it up. Oh, I can't. Maybe there's a setting there that you have, Daniela, that
All right, I need to check that. I haven't changed
then
anything.
please ask the owner to enable chart layout sharing or publish it by interested. Instead of sharing the link, Daniela, share
Mhm.
go to the camera and do copy image.
Copy image. Okay.
Mhm. And they copy the image into the all right. And I'll wait for that chart in a minute. All right, so that was the today's main lesson, right? Reading the impulse and correction with the fib and kind of labeling it
Question, G.
properly. The retracement extensions. Yes, go ahead.
Yeah. I'm just trying to get this in my mind. Now you got a 4 hour field. You say you do, you follow your system, and then you drop down to the 1 hour box. You do the field on the impulse. So now you got two fields. You got 4 hour and you got the 1 hour. What am I looking for? What's the correlation? What do I need to be looking for?
Perfect.
Between those two fields. I mean, it's just like, is it overlapping one another, or what am I looking for
Perfect.
when I
Yeah,
put
so
both of those fields on the chart?
yeah, so for the most part, I'm always fibbing three things, right? And I wrote this
Okay.
down here. This is where we're going to it right now. Um, can you erase this? Okay, so on the weekly scale, right? Um, I'm using this candlestick right here
Right.
as the control. Okay, so that's basically the markup. We don't even have to go to the weekly's the time frame. If you have this session indicator, just like how I have mine,
Yes, I do.
that's it right there. We're in the 4 hour chart already. Okay, so here from the 4 hour chart, okay, step number one is find the
Control
weekly
candle.
control candle for the week. We got it right there for now. This one.
Mm-hmm.
Yeah. Dan's still Dan's point is valid that this one is still has a lot of strength, which it's playing out. That's just tough to break. But as we're moving forward, I won't consider this as a control candle. I won't consider this. If anything, this one is safe, and this one is safe as well, depending on how you want to play it. I'm gonna pick this one right here. Okay, I'm gonna pick this one right here. So we got the low and the high,
Mm-hmm.
and you fib it low to high
Right,
simply
right, right, right.
because,
I got it.
right? So this is our
Mm-hmm.
maps, right? This is The fib levels are oh, there it is, Danielle. Thank you. I'll share that in a minute. The fib levels are our support and resistance. Okay.
Right.
So every fib level is kind of like a floor or a ceiling.
Right.
Okay. So right now, because we're above the 23%, I'm expecting that, you know, I'm not saying for price to come back and touch the 23%. I'm saying because we're above it, momentum on an intraday time frame could potentially push us up to the 0, and then maybe up to the -18, and then
Right.
maybe up to the extension. So
Mm-hmm.
on the weekly time frame, that's kind of like the roadmap for the week. Okay, the roadmap for the week. Okay, simple enough.
Right. Got that.
And then here, right, that's when we drop down to the 1 hour time frame with the box system. Okay, with the boxes, the SMT boxes on the 1 hour time frame. Okay,
Gotcha.
so here, remember this gray fib, that's the
Weekly.
weekly
That's
fib.
the weekly.
Now this is the 1 hour momentum fib from here to there.
Right. Gotcha.
And I'm gonna color this one blue just to match the box. Okay, like so. So we're basically repeating the same story, the same recipe, Ron. The only difference,
Yes,
right,
sir.
is the scales are getting a lot smaller, and what do you call it? It gives us more opportunity, but it's still, it's still the same recipe. We found the low, we found the high, we measure that
Right.
impulse, and it's just
Mm-hmm.
about, okay. Like, let's say, for example, let's say we were waiting for price to come back to 23%, right?
Mm-hmm.
Get a touch and go. But price never does that. Price finds a way to push back up. And what just happened? It established itself above the 23% on this 1 hour momentum scale. And then from there, they'll take off. You
Gotcha.
see? So that's
Mm-hmm.
how we use that. So and then that's 2 fibs. So how do we fine tune intraday, right? Well, intraday, I'm gonna go down to maybe, like, again, we're gonna go to the 5-minute chart, right? And the 5-minute chart has its own 5-minute box. You
Mm-hmm.
see? So then what are we gonna do here? So same thing. We can measure this box low to high. It's blue. It already gave us a retracement very near the 50%. And then maybe this one right here, right, will take us to, let's say we put an entry at the 50% and we let it take us to the extension. Right. So that's basically our intraday attempt to buy the market. Take profit at the previous weekly high and then call it a day. And then from there regroup. Basically
Gotcha.
this 5-minute box
It's the entry point.
It's our intraday guide. Our intraday
Mm-hmm.
guide. So Monday we're gonna look for buys because of the way this box is structured, right? If it turns red for whatever reason, we may look for sales. But the bigger scale is bullish.
It's bullish. Yeah. Okay, I got it. I see it.
Perfect,
Yes,
man.
sir.
Oh yeah. Thanks for those questions, man. You're starting to. The more questions you guys ask is because there's more understanding
Hey man,
coming. So.
I got to get this. It's simple enough, but just some little details. But I'm getting it. I'm getting it.
Nice. All right, Daniela also too. She's got some trend line breaks, and there we go. I thought I was the only fib crazy person, but Daniela's catching up.
Sorry, my chart is a little bit messy.
No, that's fine.
I left it like that, and I've seen since last week or the week before I started with marking up also the what's called on the left, the harmonic.
Mm-hmm.
Then there was a flag was establishing and then breaking that channel, and another pole starting to establish, and that's another flag, and now it broke it again. So that's what I just marked up and seeing what I consider to maybe be bullish again, you know?
Absolutely. No, I mean the gold has been bullish. I mean, it just did a crazy pullback. Yeah, and then obviously with everything else that's going around fundamentally around the world, it's just it just it just brings more uncertainty, and I won't allow it to trade it properly. But overall, I mean, gold is bullish. Alrighty, guys, thanks for sharing there, Daniela.
Thank
See.
you.
And again, right, so this is a good observation here, right? If this box actually does change colors and it goes red, right? That's why we have the 1 hour to kind of protect us, right? Because the 1 hour simply want to find a way to come back, let's just say, to the 78% level,
Yeah. And
right?
if you look at
Go
the
for it,
box
Dan.
system, you know it's gonna, because after this low is taken out, and now that's gonna push the midpoint up, and
Mm-hmm.
everything's gonna be pretty much right in this area. And as the 17 goes down, we're gonna start seeing that shift in the red direction. So I don't know how many minutes that is until that we hit this point. But you know what I'm saying?
Gotcha. Yes, sir. All right, so check this out here, guys. Get this other Dan. So here's the thing. Okay, let's say this 5 minute system it fails, right? And it turns red and it actually comes back. Okay. And let's say it actually comes back below this low right there. Okay. It's a liquidity area. Okay. As they say. But we just talked about that, right? It may not be that. It just may be. I mean, it is that, but also we have tools like this. Okay. So if I fib from high to low in this direction. Now again here, Rod, I'm going fib happy here. Just
Yeah, I
measuring,
understand. I
you know.
understand.
But now that you know how
Normally,
to
that's the way I would do it. Yeah.
yeah, right. This is just me back testing the fib on different scales. But the roadmap begins from the weekly, the 1 hour box, right? And what do you call it? And then the intraday 5 minute one. All right. So let me change this fib up right quick. All right. So here it is, guys. You see? If we do get below here, it's basically an impulse. It's a correction. So it'll well before we actually get down here, right? Price needs to beat the 23% of that, correct?
Exactly.
Right.
So we actually potentially start looking for buys in this area
22%.
first.
Exactly.
Even
And
if we
what
take it back to the 50 or the 618, so if you see the hits the 236, we'll probably see another pullback at least to this area, and then maybe this area, 50.
all right, let me erase this. This is getting good. Are you guys seeing how the fib works, guys?
Yeah.
You guys seeing it, right?
Great.
Let's get maybe a thumbs up there. It's just something how the price likes to move with the fib. Okay. Because I know it's all over the place, but at the same time, I think it's organized enough, right, to where like it moves. Again, but having the bigger scales, the weekly scale and the 1 hour box scale, I think that's a good guide. Everything below that is just kind of us having fun with it and just kind of back testing how it can work on different scales, right? So let's say price does find a way to, and let me hide the actual indicator just so it won't get in the way. Hide indicator right there. All right. So let's just say that price is also gonna follow this impulse. Okay. It's not automatically right that it's gonna come down here. It first needs to beat the 23%, correct? So here, price first needs to break that. Simultaneously, look where this 23% is on that bigger box scale, right in between, right? The 50 and 61.8%. Dan literally just said, right, Dad, price can come back up here, maybe back to the 61.
Or even back to the one, because all of a sudden here's the pattern I love to look for. Boom, boom. There's that bearish harmonic.
Perfect. But even so, like, so let's keep that at 61% in line, right?
Yeah. Mhm.
What's lined up with the 61% on the right-hand side?
236. Okay,
The
I
two
get it.
three, the 236 of the 1 hour scale,
I
right?
got you.
And then what Dan just mentioned, right? This technically is a bearish harmonic pattern that if it completes, right, we're gonna get a reaction from this point. And if we get a reaction from this point, what is it connected to? The extensions of the 1 hour time.
At the 272, even if it pulls back that far. Yeah, so you're right. Yeah, so it's interesting how the harmonic is definitely truly a fib in and of itself.
That's awesome.
Yeah.
Absolutely, guys. Absolutely. But again, though, right, we can't get into this complex form unless we understand the simple movements, right? Impulse, correction, know how to use a fib, know how price likes to work around those levels. Okay, how important those retracement levels are and how important those extension levels are. Now we can get into the nitty gritty of stuff, right? Like this is just kind of like and technically it's all the same thing. The only difference is that we just have fibs in one direction, we have fibs in the other direction, and we just kind of keep it in mind those levels, those important levels in mind every single time. That bada bing, bada boom. All right, guys. So let's see. Yeah, so we'll see how the market starts up when it opens up on Sunday here in the afternoon. And oh, then again, right? We're not even done. We're gonna be checking our ETM candles, right? Let's check our ETM candles here. Okay, what can help price? Let me see. I'm gonna go back to the
Really?
I'm gonna go back to the 4 hour time frame just to be consistent. Okay, and I am going to put a line at the 23%. Oh, I think Nico was also asking a question about the previous weekly open. The previous weekly open, about the opens. So all I realized, Nico, was that the opens of the weekly and the opens of the 4 hour time frame, 4 hour, daily, and weekly, they show a lot of resistance. Like it's a lot of resistance on the price, and it's very similar to like if you measure that candlestick, it's kind of like the open is usually around like the 78% of the fib, but so the previous weekly open, right, of this, even though it's not a control candle, right, like even here, right, look at this one here. We were going to get a lot of resistance very near the open, and it got very close and it just kind of rejected up. Here, the open price came below the open, and then this one this was not the best example, but it is there. So this is going to be interesting right here. Let me actually mark up the open of this little doji. Let me just kind of label it weekly open. And let's see how it looks on the 4 hour scale of things. Ah, look at that. That weekly open, okay, is at the 23% of this 1 hour fib.
1 hour, sure. Yeah.
Coincidence? Not. So there is going to be resistance there. There is going to be resistance there. Okay. So the way I want to play it though, I'll leave that weekly open there. I will put in here as well the 23% level. Okay. I'll just label it 23%. All right. And now I'm going to be just kind of seeing what ETM candlesticks are there to really kind of help us. Oops, sorry, Dan. I was going to go up. What time frame we were in? 4 hour? Is that where you're circling? The break of structure candle? Perfect. All right. So let's go to the, I'll come back down there. Anyways, go to the 12-hour, right? Walk it down. And again, though, right? When we change time frames, these fib levels won't change. Okay. Now we're just focusing on the candlesticks. So the 12-hour candlestick does not have any, what do you call? Go to the daily. So daily, we are forming a rally-based rally. Okay. If price does come back and touch the 23% of the week, it is very near the open of that Friday. Okay. That's not a bad area for price to get a reaction. 12-hour time frame is 2 consecutive bullish candles followed by a third. Okay, I'm not getting too much information from there. There it is. What do we have here? Rally-based rally. Beautiful. Nice little rally-based rally the 8th. Pablo, estaba esperando tú del viernes. Gracias por Pablo. Ahí estamos. Have a good day.
Yo, you day, Pablo.
8-hour rally-based rally. Perfect. Lined up with the 23% of the week, and right in between the 38% of the 50. That is definitely a good buying zone right there. All right, guys. Let's go to the 4-hour time frame. The 4-hour time frame, that's a break the structure candle. Okay, that's good. Let's go to the 2. Nothing much there. Maybe we can play the little imbalance game right here. Fill in the fair value gaps. Let me hide indicators. Hold on. Before I even hide indicators, what are we with the 8-hour zone? Okay, what is it very near based on the 1-hour box?
204. Yeah, 5204. Yeah.
There it is. So it was on right here, right, guys?
Mm-hmm.
And it's right at the 50% of the damage of the 204. It's a lot of resistance there. Okay. And I think indicators, that 8-hour rally-based rally, it's a very nice little BEC.
Yeah.
Yep, it is. It is a good BEC right there. So now we can fine tune or filter down, right? Or not fine tune that 8-hour rally-based rally into this 1-hour BEC. So let me back it up a little bit. Let's go to the 8-hour time frame. Okay. What is the markup for the entry and stop loss based on a rally-based rally? So it is like this. Well, we can count the wick, right? Yeah. But entry there, stop loss here. Okay. And then we at least take it to a 1-to-1 or a 2-to-1. Let's put a 2-to-1. Just so we won't look like newbies too much. Okay. 2-to-1. 8-hour rally-based rally. Everybody follow along right there. How that worked. Okay. Entries at the equilibrium zone. Stop loss at the low. Let me see. NEMS. I've been playing a lot of 51%. Nice. Let's see Nehemiah. I'll open up that chart here in a second. It takes a lot of patience for that 61%, man. That's a good skill to have. So 8-hour rally-based rally, that's the pending order from there. On the 1-hour time frame, right? We found the BEC. So now we can actually fine-tune the entry to the BEC, which is also the 1-hour rally-based rally. And what is the technical setup for the BEC? Well, the BEC is entry there, stop loss below the engulfing candlestick. And instead of going for a 2-to-1 here, right, we can go to the take profit level of that 8-hour 2-to-1. Y'all see that, guys? That's going to be very, very interesting to play out.
Bing, bada, ba, boom.
That'd be really good, yeah. That'd be very, very good. I mean, that's only a 50 pip stop loss to a 450 pip reward. There you go, Nico. It'll probably take a couple of weeks, maybe till, you know, but you never know with gold. I mean, look at this. They moved 500 pips in less than an hour just by um President Trump saying, let's see here. Open up your charts. Nice clean chart, by the way, man. Let's see. Ooh, what is this? Oh man, that was a good one. That was a good one right there. 61%. Where'd you get this fit from? Nems?
Sorry,
Why
say that
not?
again. Giovanni?
Say it again. Yeah, I
Can
will
you?
hear you.
Okay, can you? There's a question I do want to ask you though. Is you see, because I've been really trying to understand structure even more, but you see how this market's a bit choppy. So the reason I've been testing obviously the 61, just building my patience. Yeah, but in choppy markets, like this took a couple of days before it actually played out, innit? Yeah, so as you can see, so my thing is, when it's choppy like this, how would you kind of like fib it or just get a small piece of the pie if that makes sense?
Yeah, when it's choppy like this, that's why the weekly fib and then the 1 hour fib is kind of like the best guide
Hmm.
for it, just to keep it like this. That's what I was asking. Where's this fib coming from? Like an hour time frame or a
No,
weekly?
this was based on the 4 hour.
4 hour. 4 hour
Yeah.
structure?
Yeah, 4 hour
4 hour
structure. Yeah.
structure. Okay, gotcha. Yeah, so the 4 hour structure will also be ideal, right? As long as you're above, as long as you have a 4 hour and above measurement, I think we can be cautious there.
Hmm.
And not be cautious. We can use that to help us out. But this is a perfect touch, man. 61% backed up with a 1 hour rally base
Right, that's
rally. I
right.
mean, yeah. So like
So
me, yeah, go for it.
I was just gonna quickly say I don't know about everyone else, but I noticed that I've been obviously trying to trade every single day, and I've just thought, you know what? How can I just be more sniper entry? And one of the things is was trying to trade less, um, but try and get a bigger reward out of it. And there's been other trades where similar plays has happened. I just can't remember what one it was now. Where I'm noticing that the 61 plus with the rally base rally there, it's like it's been golden for me.
Well,
So
that's maybe a rule we need to write down, guys. 1 hour, like for example, 61% on a higher time frame, 1 hour rally based rally, very similar to Dr. Latrice's what is it? Evening morning star followed by a rally based rally scenario. You know, Intraday, I'm only trading gold, Nims,
mhm,
every day.
yeah.
Every other pair in Forex, I want to position ourselves where like we find the best entry, okay, on a currency and get this one and
Hmm.
ride those pips to the top. So
Yeah.
I would like to trade, gold for me is an everyday thing. That's kind of how we sharpen the knife, right? Keeping it strong and everything. But if we can catch a move, guys, on the yen pair or a GBP USD or a Euro USD, if we catch that one, I think a good position. That is how we kind of, we trade a secondary account and just let it run, right? Teach us the patience there. If I was more of a US 30 trader, it'll be the same thing. It's like, find your commodity or find
Hmm.
your index. Trade that intraday, to get some pips here and there, and then trade your bigger account. Excuse me, trade a swing one with the currency because man, that's a very nice one right there.
No, thank you. Because, like I said, I appreciate this session because I'm literally, once you upload it, I'm going to go back and watch it again because I do want to tighten up a little bit more in it with using the
And the way
fib.
you can back test is just fib, find the fibs from previous weekly highs and lows, and go
Hmm.
from there.
All right, thank you.
My pleasure. But yeah, guys, I do like this markup on the 1 hour time frame. And even if we go down, let's see, now let's kind of go to the 45 minutes, 30 minutes, right? There's a little BC there, kind of giving it some more confirmation. 20, 15. We have this little base rally waiting right there at the 23%, right?
Mm-hmm.
Yeah. So yeah, I like this, guys. I do like this chart. Let me share this here on the 1 hour time frame.
Now I notice you deal with different brokers. You go Saxo, Forex, or and is there a strategy with that, or just you just looking for wherever the ETM candles are for different charts, or what? It's just,
Yeah, okay. So good question there, Ron. So, when you put an XAU on the symbol search, right? You have
yeah,
all
yeah,
these brokers here.
right, right.
Oanda is the most popular one out of all of them. I think I was using Oanda for a long time, and then I started using Saxo for some reason. Well, then I realized that the time frames were not the same.
Mm-hmm.
Excuse me, the opens and closes were not the same. So if I go to it only happens on the 1 hour time frame, everything's gonna be the same. Okay. On the 1 hour time frame, everything's gonna be the same. Let me show you guys this example right here. Hold on. Yeah, let me do it like this. We'll wrap it up here right at 8 minutes from now, just to kind of respect everybody's time. I think we had a good session, a great session. Um, And just a quick announcement, right? That later on this afternoon, I will be sharing the Discord link to the beta Discord, so we can all start working from there. Okay, and then we kind of use it for about a week, and then we'll move back. We'll move officially over. We don't need the symbol. We do need the interval. All right, perfect. Okay, we don't need that here, and we don't need this here. All right, so I'm in gold. On the left hand side is Oanda. And on the right-hand side, we're gonna have Saxo. Okay. Because we're on the 1 hour time frame, it's gonna be identical. Okay. The wicks and the candlesticks are gonna be identical. Okay.
Right, right.
Notice the prices though, they're a little bit different.
A little different.
33.50 point and some change, 33.50.11. So the prices are always gonna be different. They're also gonna be different on your broker as well. However, right? How do you get more familiar with, you guys know how to read a candlestick, so you know how to you can find that same candlestick on your broker and so forth, right? Like, you look for a base rally on your broker and then find out the exact price level from it. I don't go into that much detail. Go for it.
The point you made it, because like I said, on both charts you got we're at a rally base rally now. We're either going to play this rally base rally and take it up and go higher. However, we got this BEC down here. So
Let me match up the charts 1 second. Let me match up the charts a little better. Let me mirror them better. Hold on.
Yeah, and they do match up really nicely.
Go for it.
And if you see the BECs here, you got a BEC here, you got your rally base rally. Because I usually just work with the 5 minute and the 1 hour charts. And the weekly. Those are the only three charts I deal with when I look at it. And yes, they are identical on the 1 hour, even if looking at GNT, which most of us have, you'll find those same moves, especially on the 1 hour. Yeah.
On the 1 hour, it's always going to almost be identical, because obviously each hour is opening up for each hour, right? The hours are consistent. But when we go to the 2 hour time frame,
that's a different story.
It starts changing. So long story short, the even time frames do differ from Oanda and Saxo. Okay, the even time frames do differ. Okay, I don't know exactly what time Saxo opens up, but it opens up 1 hour later or 1 hour before the Oanda, and that's the reason why the movements is different, as you guys see here, right? I mean, look at here. This one at 1 o'clock in the morning. Hold on here a second. Oh, there it is. I didn't know that. You see the cursor, guys? You see my cursor? If I hover over the cursor on the Saxo chart, what does it say? 1 o'clock in the
Same.
morning.
Mm-hmm.
What does it say on the and the chart on the left? Midnight.
Midnight, yeah.
So on the 2 hour time frame, that where I have the vertical line there, that is at midnight, and over here is 1 o'clock in the morning. That's the reason why. That's the only reason why these candlesticks look different, and that's kind of the reason why around I kind of go back and forth, because I can collect slightly different information. Like, okay, you know what? Maybe
Okay.
price is trying to come back to about 50% of this candlestick, but on the end, it doesn't. You see? So let's see. Let me measure this candlestick by itself and put in there the 50%. Let's see, I don't have it over here. You see, he's like, okay, let me see. So now let's go to the 4 hour time frame. See, on the 4 hour time frame, this is technically a break structure candle. This one it is too, but not the same. So that's the only reason why I switch back and forth.
Okay.
And it's because of those differences. A great question there, guys. Now, let me share my chart. We'll close it out. And I do like that 1 hour play. That indicator. It's below the 23%. I mean, at 23% of the week. Yeah, 1 hour time frame is fine. Gold weekly outlook. Oops. And just before I wrap up, guys, yeah, I'll be giving us access to the Discord. Okay. It's only going to be for our current inner circle members. And then we're going to use this all next week to find a flow. Your feedback is going to be valuable on this. And so we kind of clean it up and remove what we don't need, use more of what we have, and we'll go from there. Okay. I do like it that you can actually schedule events here. You can actually add them to your calendar. Now, granted, some classes are through Vimeo, through Yes for Yes, but I think just having the calendar here and adding it to your calendar it's a big plus. And then also to there's Discord is Discord, right? Everybody's familiar with it. But I don't want it to be too busy either, because too many chats can be a problem. But yeah, look out for a link on our WhatsApp group momentarily, about an hour or two. Latest midday, morning for me, midday for me, and then we'll come back to it. But we'll close out the session. Thank you, everybody. And once the recording is done, we'll upload it as well. Have a great morning.
Thanks, G. Have a good one.
You too, Dad. Thank you. Thanks, Rack.